In this third video in our pre-scene series, and the final one looking directly at the pre-scene before we move on to the strategic analysis and the pre-scene issues video, we're going to be looking at the extracts from the Corjetz website. And this primarily focuses on why the organization exists, the purpose of it, the mission of it, the values of it. We'll also look at some of the financial statements or some charts that have been given. We haven't been given accounts per se, but we've been given some graphs explaining the trends over the last few years with regards to revenue, profit, and passenger satisfaction. So let's start by looking at what Corjetz does. Now, we know from looking through the pre-scene so far that it is a low-cost airline company, but the what we do is an extract from the website. So this is their actual statement of what they as an organization stand for, what they say they deliver to their customers. So it's a very important statement because this is something that everything to do with the organization should be abiding by. As in any new strategies, any operations, any changes within the company, etc. All of that needs to be built around this idea of what the organization does, what it's supposed to deliver. Otherwise, it's not abiding by its own strategy. You get that strategic drift that you probably are well aware of from your SBL syllabus, where if you are not currently or consistently focused on an overarching end goal, it's very easy to drift to the left, drift to the right, drift up, drift down, etc. So, what does the company do? Well, we consistently, so what they're saying there by consistently is that they expect to always be able to deliver low fares and to operate places that our customers want to travel to. So, things that tie into that would be things like the punctuality rates for the planes, for example, the percentage of flights that are cancelled, etc. Because otherwise you're not being consistent. If, well, we land 3 out of every 4 planes, or we keep to time 3 out of every 4 times, etc., then you're not consistently doing that. If you sometimes have to put your prices up because of surges, etc., price surges, then you're not consistently delivering low fares. So what at the crux of everything that you may suggest in the exam, for example, is to deliver low fares and operate flights to places our customers want to go. So anything that's not what the customers want, anywhere that's going not where the customers want to go, if you start doing a hub and spoke, and of course they don't want to go to the hub airport, or if you put your prices up, you're not consistently delivering to that what we do. And I've got a few comments here, points that I've just put on the screen, and this was based on a model called the Campbell's mission statement. And it doesn't just apply to mission statements, it also applies to vision statements and things like that as well. But it's ultimately what a good statement from the company or reason for the company's existence, what it should contain, what we should do contains. And it should contain the purpose of the company, the reason why it exists. So for example, we've got in the mission statement here, our mission statement is to connect the people of Hungary through affordable and sustainable air travel. So that is the purpose, to connect people of Hungary. The strategy is in a sense how they compete, what they do. And we know that they are in a low-cost air travel. So air travel is the strategy. That's how they connect people. They exist, the purpose to connect people, they do that through air travel. And their values, that's what the company stands for. So that would be the affordable, that would be the sustainable. So we've dissected the mission statement there using those 3 concepts. The mission statement is to connect people. They do that through air travel, and they value affordability and sustainability. So it's a very tight, very concise mission statement there. And it also ties into what we have been speaking about throughout the rest of this pre-scene analysis so far, that everything is ultimately geared to this idea of efficiency, of cost management, of passenger satisfaction, being able to take people where they want to go for as cheaply as possible. And it's very important when you have a mission statement that you evidence that you are living by it. And of course, we've seen about the new planes that have been purchased. We've seen about the age of the aircraft being much younger than the industry average, using ones that are more efficient, ones that are lower cost in terms of the fuel. They use less fuel, they're more efficient. So we can see that they are abiding by those principles and those values as well. And the final one, principles here, this is not necessarily what would be external. This is basically principles would be about ensuring that people from within the organization, internal stakeholders, are abiding by that purpose, strategy, and values that you have externally presented. So that's a bit of information about that mission statement there, and what you should be thinking when you are going through any kind of project, any kind of operations change, whatever it may be, is keeping that what we do in mind, that mission statement in mind. If you are about to suggest something that is completely out of whack with the mission statement and the what we do, then perhaps it is not suitable. Perhaps it's not acceptable. It's not going to be acceptable to the shareholders. It's not going to be acceptable to the various internal stakeholders or external stakeholders, the regulators, etc. And the values are what the company lives by, what it should be doing, what it should consider in everything that it does. So very similar. So you can see we've got 5 main key values for this company. And what, again, you should be doing is not going against these values, is understanding that these values are important to the company, making sure that you have steps in place to mitigate any impact on those values, and making sure you're not doing things that are going actively against those values. So we'll start with a commitment to health and safety here. So they've said that their commitment to health and safety is around staff safety, customer security, and emergency preparedness as well. So that would mean things like making sure that they have health and safety policies in place, making sure they conduct drills to make sure they're ready for the emergency, and security, particularly for things like cybersecurity. We've spoken about the apps and we've spoken about ensuring that you have effective servers in place that can kick in if something goes backups, if something goes down, or if there's some sort of attack, making sure you're ultimately covering those risks. Building customer trust, very important as well. So key metrics here would be things like passenger satisfaction, customer satisfaction, ensuring that you are consistently providing that affordable and that direct and that punctual service that you have built your business upon. Making sure that you've got your data protection in place. Again, that goes back to the cyber. And remembering that customers just simply are important stakeholders to this business. One thing here that they have said as well is preventing bribery and corruption. Now, bribery is absolutely always unethical. It goes completely against ACCA and the various different components of that: integrity, professional competence, due care, etc. Never ever try to argue that bribery can be, it's a grey area, maybe it's okay. For the context of this exam, what you almost want to do is think of ethics in a fairly black and white way. Now, I know in the reality, in the real world, etc., that ethics can be a grey area, but for the context or for this exam, what you probably want to do is think of it as quite black and white, quite binary. It's either ethical or it's not ethical. And of course, you want to come across as being ethical. It's part of your, as an ACCA student, it's part of your professional competence, it's part of the principles of the profession to act ethically. Accountants have to be ethical. So you want to express your commitment to ethics wherever you can, because it's going to look good on your answer script. Also, driving innovation, again, mentioned that previously about the history, the makeup of the company, this idea it was founded on innovation, founded on taking advantage of opportunities, etc. So investing in technology, innovating to improve the customer experience, etc., that is at the forefront of the mindset. So what it says to me is, again, this idea of being strategically led, this strategic innovation. There is, going back to your Pastel analysis that we've been looking at occasionally throughout the video series, this idea of like technological advancements and being aware of that and adapting to changes in the technological environment. And also it shows that a willingness to invest, a willingness to spend. Now, of course, the shareholders will want to know about the returns of that. You don't want to waste $100 million investing in something that isn't going to pay off, isn't going to provide more returns or more savings or whatever it may be in the long run. And then we have putting people first. So specifically, they've spoken about the employees here, but this could also be about anyone else who's an individual, who's a person that deals with the organization. So it could be the customers, it could be the passengers as well. And again, we've spoken about the importance of staffing, the importance of staffing issues, and making sure that you do things to mitigate staffing issues. They are important stakeholders. So offering them fair reward, offering them development opportunities, engaging with them. That instance where it said that they allow them to purchase shares in the organization, etc. That's really useful because that's really important for retention. We know that it's a very competitive industry. We know that there are 30 different low-cost airlines in Hungary. We know that there are 3 big ones, of which we are one of them, but there is 30 overall. And actually, there's a couple of very big ones that perhaps would be poaching our staff if we don't treat them right. So we have to make sure that we retain our staff because that's important for our competitive edge, because ultimately everything is about efficiency and cost management. And I mentioned before that it costs a lot of money to train a new staff. They're much more inefficient in their working than an experienced staff member is. So even if it means paying an experienced staff member more, even if it means paying them quite a lot more, the more that you are paying them is worth it because of the cost of training new staff. Because staff efficiency, staff experience, staff expertise, staff knowledge ultimately equals lower costs because it's a more efficient operation. And that's also something to be mindful of as well. The importance it mentioned about the embedding the enterprise risk management, putting and installing this idea of risk management throughout the organization from top to bottom. That's what it's all about. That satisfied, helpful, loyal staff are going to be far more vigilant on risk. And there's also less risk that they'll take their skills elsewhere. And finally, sustainable behavior, again, tying back to your ethics, tying back to your CSR and your costs as well, investing in those efficient aircraft, managing those emissions, ensuring the planes are full to reduce that per passenger CO2, etc., and minimizing waste where they can, implementing systems, quality management systems that reduce the amount of waste, very, very important for this organization. And on to the final page. So this is the headline results and cost breakdown for the organization. So here we would expect to see just a few bits of information about the trends over the last few years and also about their passenger satisfaction, punctuality, you can see there. So let's take a look. And it's useful they've given us 5 years. So what that means is that we can see a trend. For example, the revenue here, we can see a trend over 5 years. It's not a case if they've just shown us 2 years. If they've just shown us 2000x1 and 2000x2 and we saw it's a slight increase, maybe it was a slight increase from the year before, maybe it was actually down on the year before, we wouldn't know. We could be speculating what XO, X9, W9 and W8 were. So we can see an actual trend there, and it's a very big improvement. So in the last 5 years, they've increased their revenue by 40%. So that is quite a sizable margin. Whether or not that is sustainable in the longer term, particularly given the maturity of the markets, and perhaps the only way to improve market share now is by taking market share from others. It could be through acquisitions. It could be through expanding that multi-regional approach or an international approach, etc. All of those things are very important. And we can also see that the profits has increased at a steady rate as well over the last 5 years. It's roughly always maintained around a 8.7 to 10% profit margin throughout the 5 years, which is reasonable, particularly for an organization with a lot of fixed assets, a lot of costs involved, but it's also a very high increase. In fact, the increase here is almost 60% versus the 40% increase in revenue. So what, again, that would suggest is they are actually in control of their costs because their profit has increased at a greater rate than their revenue has. We then have our return on capital employed. So this is all to do with, well, essentially the return on investments. And we can see that it's been quite a reasonable portion, over 12%. So in the previous page, I did mention about the willingness to invest, the willingness to spend, but of course the shareholders will want those returns. And we can see that they are routinely providing a reasonable return on investment. So that again is a positive. When you have those sorts of figures, you can turn to shareholders and say, we need this money, we need to invest in this, we need to invest in that, etc. And you can then show these figures, say that generally we provide a return on money that is invested. So it's adding to shareholders' wealth, which of course is something that shareholders want to hear. Now, the punctuality is a bit worrying that it is declining. It's not declined too much. It's a decline from 81% to 79%. So it's not a huge problem, but it is worrying that it is a downwards trend. Now, that admittedly did come after a huge increase from 75 or just 75.8% up to 81. So it could be that changes were made at that point to improve the punctuality, but it's starting to drift, starting to slip back. So that is something that you'll want to worry about because customer satisfaction will, of course, be influenced by punctuality, as will things such as regulations, things with the airports and the airport slots that they sell, if we're constantly not arriving or taking off in our slots, and air traffic control as well, that we're all capable of putting fines, for example, on the company if it's not keeping to its time slots. Although one would say that actually the customer satisfaction is very high. It's the highest it's been for 5 years at 78%, particularly when it was down at 74% just a few years ago. So that's quite a big increase, despite the fact that punctuality was actually down from 2000X1 to 2000X2. The actual satisfaction is up almost 2%, or isn't 2 percentage points. So that's a good thing. That's a very strong thing. There's a sizable increase in customer satisfaction. They're taking the time to appease the customers. Now, of course, at the moment, these figures are just being looked at in isolation. So, for example, 78% people satisfied, that seems okay. It seems reasonable. But what does that actually mean? Because, of course, it means nothing without knowing what Brigaz is, what the other airlines are. Now, what the full service carriers ones are. Now, if theirs are all 95%, suddenly 78% doesn't look very good. If the other low-cost carriers are all 50%, suddenly it looks very good. So we don't really know without something to compare it to. And the final bit of information we've been given here is the cost breakdown. A few caveats here that other costs, so that 9% there, includes IT, head office administration functions such as finance, customer service, and HR management. So that's a lot of the back office stuff. So we consider that there's quite a few thousand people working in the back office. It's actually quite a small percent. Actually, the biggest things are the air ground handling fees and the fuel costs. Of course, we know that they are very volatile, those fuel costs. So that may increase and decrease accordingly based on the volatility in the crude oil prices. So these are the two things that the organization is particularly vulnerable to. So if the fuel costs were to increase, or if they increase the airport ground handling fees, the airport put the prices up, or the various different components of it individually put the prices up, then it could be quite significant. Now, we don't actually know how much these costs are in a sense of what does 27% mean? 27% of what? How much was in costs? Now, you could do a sort of rough breakdown and say, well, it was just over 5 billion in revenue and it was 500 million in profit. So therefore, it was 4.5 billion in cost. But of course, there's a load of other costs involved, other sorts of expenses or things that would reduce that as well. Finance costs, for example, might bring that down as well. So we can't say for definite exactly what these figures are at this point, but they are very high. You can see that pretty much 50% of the costs are airport ground handling fees and fuel costs. So that's a particular threat for the organization, is any kind of increase to the fuel and handling costs. Now the crew costs, 15%, again quite high, but then of course pilots, cabin crew, you need that. That will increase of course if you have more planes, but then if you have more planes, then you'll also have more revenue, more profit. Now of course you'll also have more fuel costs and airport ground handling fees as well. So to what extent these are kind of variable costs as well would be useful information. So do you pay a set charge in advance for airport fees regardless of how many planes you actually land in that particular time? Or if you have to cancel a plane, just have to pay the fee, etc. That's worth knowing. And also the maintenance costs for owned aircraft was 6%. Now that could raise the question, if they want to expand, could they lease more? Because it saves costs up front and maybe it reduces the maintenance cost as well. Although that of course means what percentage of this 8% is the leasing and what is depreciation. If all of that is depreciation, then the leasing cost probably isn't that much. But if most of that is the leasing cost, then considering that only a quarter of the planes are leased, the leasing cost would actually be higher than the 75% that are owned aircraft. Again, these are other things that we might get more exhibits in the exam that would help break it down. So that brings us to the end of this video, and also to the end of the 3 videos that we are looking at, going specifically through the pre-scene. We do have a couple of other extra videos still in this pack though, and that will be the strategic analysis and the top 10 pre-scene issues as well, or top comments from the pre-scene. So we'll use a different presentation to go through those, but it will still be referring to information from the pre-scene. So thank you for watching, and I'll see you for those videos. So thank you very much for watching this video. I hope you have enjoyed it, and more importantly, I hope you have found it useful. If you did enjoy this video and you want to see more of it, or if you are studying for the September 2023 exam for the ACCA Strategic Business Leader, then please do visit our website www.astranti.com. We have a free ACCA SBL pre-scene pack that includes all 3 videos for the pre-scene analysis, the strategic analysis, and the top 10 pre-scene issues. In addition to that, we also have our industry analysis document going through the airline industry, and 2 ACCA SBL mock exams with complete solutions for you to practice ahead of the exam. And also, you have access to our SBL discussion board, so you and fellow students like yourself in the same position studying for this exam will be able to chat, will be able to ask questions and receive answers from our tutors. And the best part is all of this is completely free. In order to access this, please click the link in the description or visit the website www.astranti.com and sign up for our free ACCA SBL resources now. So thank you again for watching this video, and do check out that website for more free content.